What's up, guys? Rules for Rebels here. Today, I just wanted to make a quick video talking about my experience with Lending Club. I've noticed I've been getting a lot more questions lately about like investing and everything from Bitcoin to stocks to somebody the other day was saying, look, I'm not really a savvy investor. I don't know a lot about stocks and ETFs and all this other stuff. And I really don't care to learn about it. Like, what are some kind of hands-off, safe, profitable investments I can get into. I don't claim to be, some investing guru. It's kind of funny. I actually bought my first house with money I made in the stock market, and I actually got kind of cocky thinking I was a really good stock trader. And in reality, this was probably back during 2007, 2008, 2009 when the market was kind of rebounding from the housing crash. I think I ran about $700 up to about 10 grand. That's what I used for the down payment on my first little townhouse. And it worked out really well. And I kind of started getting cocky and thinking I really knew how to trade. And in reality, like looking back at that time period, everything was in the dumps. I mean, Ford was at like $1. That's now at, I don't know, 15 or 20 bucks. Dow Chemical was at like $6. I think that's now back up to $50. Citibank was swinging from like $3 to $6, back down to $3 in a given day. So really later I kind of learned that literally a monkey could have thrown darts at the wall and picked winning stocks and made a killing just by the nature of everything was at rock bottom and it was coming back up. And so since then, I'm not somebody who really has the time to, you know, learn everything there is about investing, to monitor all these stocks, to stay on top of reporting, to pull charts. I just don't have the time, nor do I really have the interest in all that type of stuff. So I've kind of transitioned from buying individual stocks and trying to beat the market to just kind of doing more kind of hands-off common sense type things. So some of the stuff I'm into is like Bitcoin, investing in Bitcoins or speculating in Bitcoins. I've tried out Lending Club, which is like a peer-to-peer investing thing where you earn interest giving loans, and that's what I'm going to be talking about today. I've tried a couple different robo-investors. I currently have accounts open with Wealthfront, Betterment. I have a Scottrade account that I trade some individual stocks in, and I have a Schwab IRA that I also set up the robo-investing feature on. But I just kind of wanted to start sharing some of my experiences, returns, etc., with you guys. So this is Lending Club. Lending Club is a peer-to-peer investing platform. So if you're looking to get loan money, you can go out here and fill out a loan application. And the way that your loan is actually given to you, you're not getting a loan from Lending Club themselves. There's not one investor out there giving you a loan. How it works is people like me who are on Lending Club, we each put $25 into a loan. So you're very diversified. If one of my loans goes bad, it's only 25 bucks that goes bad. But basically, let's say if you get $1,000 loan, that's comprised of a bunch of $25 that a bunch of different people are giving you essentially. Now, when it comes to the quote unquote peer-to-peer lending, there's two kind, there's probably a lot of companies out there, but the two main ones are Lending Club and Prosper. I may have tried Prosper in years past. I don't really remember. I'll have to check. If so, maybe I'll make a video about it. But Lending Club is what I'm currently actively invested in. And I'm basically just going to kind of walk you guys through some screenshots of the back end reporting, show you kind of the performance on my investments, etc. So this is basically what your dashboard looks like. One thing I would caution you guys, a lot of people claim to be making like 16% or 18% on Lending Club. In reality, I think probably a more realistic rate would be maybe somewhere between 5 and 12%, depending on how much time and effort you put into actually handpicking loans versus doing the auto investing, as well as how risky the loans you choose are, as well as how many defaults you have. So you can see here my quote unquote historical return is, or my return currently is 6%. Now, I will say Lending Club makes it a pain in the butt to look at your order history. I was trying to figure out when I actually got into Lending Club. I looked at some bank statements and stuff. I believe it was about a year and a half ago. So, 12, 13, 14, 15. So, probably about 16, 17 months ago. I don't recall whether I initially put in 2 grand or whether I put in $1,000 and followed it up shortly after with 1,000. But as you can see, it's been about a year and a half, and the interest I've received from loans is $277.93. However, as you can see down here, I've had 3 loans charged off, so that's basically 75 bucks gone. I think I have a couple others in grace period. So in reality, my account value is $2,209.23. However, after the charge-offs, which $75.24, that leaves me with $2,133.99. So you can see here we have available cash. Committed cash is zero. As soon as some more interest gets paid and this goes up to $25, I have it set to automatically buy a new loan. And initially, I was being more conservative. I was going for like only basically they rate credit scores by like A to B, B to C, D to E, and like I think it might be E F G. We'll look on a further screen and see exactly what it is. But initially, I was being conservative, and then it was kind of funny. I was noticing that the charge-offs that I was having weren't coming from my C and D and E loans. The charge-offs that I was having were coming from loans where people had credit scores that were rated A and B. So I'm like, why am I taking this lower interest rate when all my defaults are coming from people with good credit scores? I may as well take the higher interest rate and just deal with the charge-offs as they come. Let's see, I'm not actually on my Lending Club account right now. These are screenshots, but if I were to click issued and granted loans, I could look at all the loans that I have out there. Grace period, I believe they give them a 15-day grace period before the loan goes late. So I have one in grace period. I have 16 which were paid off early. I have 0 that were 16 to 30 days late. And I currently have 5 that are 31 to 120 days late. So I'm pretty much betting that these 5 loans are going to go bad. And I have 3 loans which were already charged off, which is at $75.24. Now, those people may have paid for a couple months prior to being charged off, so I maybe got a little bit of interest off them. But yeah, I mean, essentially 3 of them, the money is gone. Next, we'll go over here. This screen we're looking at now, we're looking at my 5 loans which are currently late. So as you can see here, I mean, I've kind of adjusted my account, so I'm going riskier. So that's why I'm not really shocked that I have some of these E-loans charged off. But as you can see here, the investment in each one of these loans was $25. The interest rate on a C is 13.33, on E's 20.99, 20.49. Obviously, you're getting paid very high interest because these are risky. So I mean, if you're going to go for the riskier loans, expect to have some charge off. This D is at 16%. And I actually have an A loan that's at 7.89% that got charged off. Here we can see the principal. So, I loaned this guy $25. He's paid off out of about $9 of it. He's 30 to 120 days late. If I clicked here, I could see exactly how late he is. This guy paid $5 of the loan off. This guy paid, a couple bucks off, etc. So, like I said, this guy may have had a loan for $3,000. Only $25 of it is mine. So every time he makes a payment, maybe I get 50 cents, the next guy gets 50 cents, the next guy gets 50 cents, etc. So that's how it works. So here you can see the payments that I've received from that loan, and here you can see the payment date. So you can kind of see how far behind they are. And this is a way that you can kind of track the loans that you have that are either in grace period or which have gone past due. Now, Lending Club is going to try to collect from these people, but chances are they're probably not going to be able to. There was one other thing I wanted to say about, I haven't really dug this deep into it. For me, this is kind of a passive investment. I haven't really dug that deep into it, but I guess there is a secondary market where, I can kind of gamble and say, I think these people are going to come back current, and I can hold on to these loans and hope that they make their, maybe they're just late on the payment. They're waiting for a paycheck and they're going to catch up on things and continue paying it off. However, if I feel like some of these are going to go bad, there is a secondary market where you can sell off your bad loans. And like this loan has $17.03 remaining on it. I don't know what people are bidding on basically bad debt on the secondhand market, but potentially there's maybe somebody out there that will say, hey, look, I'll give you $5 for this loan. So I can choose to sell it or not to sell it. So if I sell my loan to that guy for $5 and this person never winds up paying, hey, I still lost money, but at least I'm not out $17. I was able to recoup 5 of it. However, the person buying this loan from me figures, okay, I have the potential to earn $17.03. I'm going to give this guy $5 for it. And if this person winds up coming current, I'm going to make, $12.03 off a loan that I bought for $5. So this is basically where you can look at the loans that are past due. Let's see here. Right now we are looking at, basically we can browse loans. So There's a lot of people out there that rather than doing auto investing like to select the loans. So you can say, okay, I only want to give loans to people with a credit score between 750 and 850. Or I only want to give loans to people who haven't had any delinquencies in the past 2 years. Or, I only want to do short-term loans. I only want to do 36-month loans. I don't want to do 60-month loans. So you can choose all that stuff. If you hop on YouTube or read blogs, there's a million people that think they have this system figured out that, okay, uh, I have very good success only doing 60-month loans and only doing credit scores for people between this and this. And you can also see the reason for the loan. So here somebody is refinancing and consolidation. Here somebody needs money to move. Here's one for other. And the one piece of advice, if you are going to hand select your loans, I've seen some people trying to take out like $20,000 and $30,000 loans for a vacation or for a wedding. Quite honestly, if you need 25,000, first off, who takes $25,000 vacations is one thing. The second thing, if you need $25,000 to take a vacation and you need to take out a loan for it, let me tell you, you really shouldn't be taking a vacation, period, let alone a $25,000 vacation. So those are the ones you kind of want to avoid. Like I said, early on, I was kind of hand selecting my loans. Now I just let the system automatically choose them for me. But I would stay away from like wedding, vacation, etc. I think refinancing and consolidation are good ones. Um, because people are trying to kind of get their debt under control. But yeah, I mean, if somebody has to take out a loan to do some type of leisure activity, that's really not somebody I want to be loaning money to. So again, this is where we can browse loans. Let's see, next. Investment alert. So I don't use this, but if I were hand selecting my loans, tell us your target interest rate and we'll find notes that match your investment strategy. So if I wanted to create an alert, I could create an alert for various settings. And, if somebody's looking for a loan for debt consolidation and they have a credit score between 650 and 750, and they haven't had any defaults in the last 2 years, I'll get an alert that says there's a loan that meets your criteria, and I can then look at that and decide whether or not I want to invest in it. So this is for people who are looking to invest in specific notes or handpick their investments. Here is a look at my automated investing. So I'm really going heavily on. I'm not at the riskiest portfolio, but I'm also not being that conservative. So I'm going for the C's and D's, which are going to pay out a much higher interest rate. But I'm not quite ready to go like EFG, where you're going to get a ton of interest, but you're also going to have a lot of defaults. So this is basically the current allocation of loans that I have. I may wind up switching back to conservative if I continue to have a lot of charge-offs, but for now I am going to leave things this way. What is this? This is just kind of a look at the current loans I have. I forget what it said in the first screen. I think I have about 125 current notes out. And here you can just kind of see, here's my investment, here's the portfolio that it's a part of, here's their credit score rating and the interest rate I'm getting. Here's the terms. You can see I have a mix of 36 and 60 months. Here's the outstanding principal. This guy's almost paid off. He's got $5 left. Here's the amount of interest I've accrued to date. Here's the payments received, and this is their next due date. And I can see if the loan's been current. This one was just issued, so they haven't had a payment yet. But you can kind of see all that data. And then here's where you can, if you want to do auto investing or if you want to kind of let them pick the loans for you, you can do A and B weighted, which the projected return is 5.98%. The historical returns are 5.22 to 7.56. You can pick a platform mix, which is kind of a mix of everything, and you're gonna have more poor credit rating people, but you're also gonna earn a little bit more interest, and it's gonna be kind of weighted to make sure you're not too risky, you're not too conservative. We have D and G weighted, which is a projected return of 8.21%. And then you have a custom mix, which again is 8.21%. Quite honestly, I'm not really sure how custom mix differs from the D and G. Oh, I think maybe I selected that mix. And here's just kind of some stats about Lending Club. Like, Lending Club is not some small fly-by-night company. They've been around for a few years. I'm not going to give you the whole spiel about Lending Club and who they are. You can go Wikipedia them or whatever if you want to know that. But I remember reading an article not too long ago on, I think, Drudge Report or something like that, and they were kind of commenting on how a lot of the investment banks and things like that are starting to buy Lending Club debt. So, I mean, Lending Club is starting to be taken seriously as somebody in the financial world. To date, they've issued over what's that, 20 billion, $687 million worth of loans. And like I said, they're starting to sell them off to investment banks and the secondary markets and things like that. So they're starting to be kind of a powerhouse in I guess kind of the loan business, for lack of a better word. Here, just some kind of interesting stats about people taking out loans from Lending Club. Here's a breakdown of the purchase for loans. 44.69% is for refinancing. Just under 15% is for paying off credit card debt. And this is other, which could be like vacation, wedding, home remodeling, etc. Quite honestly, these are kind of the ones I want to stay away from. I like refinancing and I do some credit card payoffs, but I would kind of avoid the entire other category here. Here we can kind of see the loan issuance by state. So my state of Illinois actually has some of the most loans out there. Texas, California. You can kind of see a breakdown of what states are getting the most loans or the most involved in Lending Club. And that's it. That's the end of this little slideshow here. So what do I have to say about Lending Club? For having my money tied up for 16 months, or I'm sorry, for about a year and a half, I feel like, having made $133.99 by tying up $2,000 for a year and a half is kind of low. I probably could have made more money in the stock market. I probably could have made more money spending this money starting a new business or, running AdWords ads. I think there's probably better uses for this money. That's not to say that I don't like using Lending Club or I wouldn't recommend using Lending Club. Here's basically my thoughts on Lending Club. It's going to get you more money than a savings account or a CD would by far. I think even Ally Bank is around 1%. So, if you're somebody who doesn't really care to learn about how to play the stock market and doesn't really want to take the risk of the stock market, here's a way to earn better interest than you're going to get at a bank or in a CD or a money market account, with relatively minimal risk if you choose like an A and B weighted portfolio. I think it's probably safe to say, it says 6% here. I think it's safe to say you're going to see a 3% plus return. I think a 4 or 5% return is very realistic, but with charge-offs, it's going to drag that down. So I would say, conservatively speaking, you can expect a 3 to 5% return. That's, like I said, going to outpace banks, CDs, savings accounts. I think this is less risky than the stock market. Although I think the stock market can be a lot more lucrative, it's also more risky. So yeah, I mean, if you're somebody who has some money laying around that you don't need in the next 3 to 6 years or 3 to 5 years, you may want to do Lending Club. Keep in mind the shortest loan term is 36 months, so that's 3 years. So if you invest $25 in a loan, unless they pay it off early, which doesn't happen that often, it's going to be 3 years before you're fully paid off for that loan. So this isn't something where your money's super liquid. Don't go putting $1,000 in here if you're not really financially secure, because 6 months from now, if you're like, oh man, I had an unexpected car repair come up, I need that $1,000, you're not going to be able to get it back out. So, whatever money you put in here, plan on not seeing it for the next 3 to 5 years. This was $2,000. I don't really need the money. I wanted to try out Lending Club as kind of an experiment. I do think I'm going to see a return on it. Is it going to be a giant return? Probably not. I don't know what I'm projected to have off this money by the end. My business partner actually got involved with Lending Club as well. About a year and 2 months into it, he kind of got fed up with it. He's like, I'm getting, loans charged off. The interest really isn't, all that. I think he was kind of expecting like 15% returns like Lending Club promises. And we've kind of learned that you're really not going to see those high returns that Lending Club maybe likes to advertise or that some people out there claim to get. So he's kind of like, I'm fed up. He stopped doing his auto investing and is basically, as his loans come due and as his loans get paid off, is just going to start pulling his money out. I actually still have my auto investing active. So like I said, I mean, as soon as this $23.08 hits $25, my account is going to be automatically buying a new loan. I really don't see unless things really start going south and I get a ton of charge-offs, I'm probably just going to let this money sit in here forever. And, maybe when I'm 60 years old or something, I don't know, maybe it'll be $4,000 or something like that. I don't know, but I don't really need the money. There's not really anything better I have to do with the money right now. So I figure I'll just let it sit here. I'm earning, better interest than it would sitting in a bank. So I'm going to leave things be, but I don't know, guys. Hopefully you enjoyed this video. If any of you guys are curious about Lending Club, or if any of you guys have any questions, feel free to drop them in the comment section below. I'd be happy to answer to the best of my ability. If any of you guys are using Lending Club, let me know what your experience is. What type of return are you getting? Are you experiencing a lot of charge-offs? If any of you guys have your own strategy for what types of loans to choose, feel free to drop a comment below and share that with others. And if you guys have anything to say about Lending Club, if you want to share your experience, whatever, leave a comment. Again, give this video a thumbs up, subscribe if you're not subscribed, and if you guys kind of like these types of videos, let me know, and maybe I'll do a kind of a review or my experience with, I don't know, Wealthfront and Betterment and Charles Schwab and some of these other guys as well. So catch you guys on the next video, and we will talk to you later.